Bitcoin ETF buying led by retail hedge funds (VA). Larger players still to come. Bitwise CIO. The large U.S. wirehouses have yet to offer the newish funds to their clients, Matt Hougan told CNBC. Bitwise Chief Investment Officer Matt Hougan expects even more demand for the spot Bitcoin ETFs as larger U.S. wirehouses begin participating. He said that the current demand has been largely coming from retail investors, hedge funds, and independent financial advisors. Bitwise's Bitcoin fund BIP is one of 4 spot Bitcoin ETFs that have crossed $1 billion in AUM since launch. The 10 spot Bitcoin ETFs have arguably had one of the most successful launches in history, with trading volume and inflows reaching new highs this week. But Bitwise Chief Investment Officer Matt Hougan expects even more demand is on the way. In an interview with CNBC on Thursday, Hougan said that the initial demand for the ETFs, among them his own company's BIP, has largely been coming from retail investors, hedge funds, and independent financial advisors. I think there's an even bigger wave coming in a few months as the major wirehouses come on, he said. Some of the largest wirehouses in the U.S. include Bank of America, Wells Fargo, Goldman Sachs, and JP Morgan, none of whom have yet to offer the funds to clients. The Bitcoin ETFs on Wednesday blew through their daily volume record with roughly $7.7 billion in trading, up from the previous record of $4.7 billion, which had come a day earlier. BlackRock's iShares Bitcoin ETF IBIT had nearly $3.3 billion in volume, more than double the previous record of $1.35 billion. The fund also now has more than $9 billion in assets under management, sitting atop the AUM leaderboard for the new fund's XGBTC, which was in existence as a closed-end fund prior to its conversion to an ETF. Following IBIT, Fidelity's FBTC has accumulated more than $6 billion in AUM, and the only other 2 funds with more than $1 billion in AUM are ARK/21 Shares ARP and Bitwise's BIP. There'll be some consolidation, said Hougan, who expects 6 to 8 of the ETFs surviving long-term.